Bitcoin's influence on global markets, forecasting a 50% increase in adoption across banking, retail, and insurance by 2025. Abstract. The landscape of global finance is on the brink of a significant transformation driven largely by the increasing adoption of Bitcoin. This report explores the anticipated impact of Bitcoin on various sectors including banking, retail, and insurance, predicting a 50% increase in adoption by 2025. Factors such as institutional investment, regulatory clarity, technological advancements, and macroeconomic trends are pivotal in shaping this future. Overview. As we approach 2025, Bitcoin, the leading cryptocurrency, is poised to have a profound impact on global markets. With projections indicating a potential 50% increase in its user base, Bitcoin is set to become an integral part of financial systems across banking, retail, and insurance sectors. This report synthesizes insights from various analysts and market experts to forecast Bitcoin's trajectory and the factors influencing its adoption. Key drivers of Bitcoin growth. 1. Institutional adoption. Institutional investment is emerging as a primary catalyst for Bitcoin's growth. The introduction of Bitcoin exchange-traded funds (ETFs) is expected to simplify the investment process for institutions and retail investors alike. Analysts predict that with favorable regulatory environments, especially in the US, Bitcoin could achieve price levels ranging from $150,000 to $200,000 by the end of 2025. Some experts are even forecasting more aggressive targets, suggesting Bitcoin could reach values as high as $250,000 to $1 million. 2. Regulatory clarity. The evolving regulatory landscape is critical for Bitcoin's adoption. Globally, regions such as the EU, Canada, and parts of the Middle East are implementing regulatory reforms that reduce restrictions on cryptocurrencies. These changes are anticipated to foster a more supportive environment for Bitcoin, encouraging both institutional and retail investment. 3. Technological innovations. Advancements in blockchain technology are enhancing Bitcoin's utility across various sectors. The integration of AI with blockchain is expected to drive further adoption, creating new applications and platforms that leverage Bitcoin for real-world transactions. 4. Strategic reserves. The establishment of Bitcoin strategic reserves by governments, as advocated by prominent figures like Donald Trump, could legitimize Bitcoin as a mainstream asset. Countries like El Salvador and Bhutan are already adopting such measures, increasing demand and fostering price appreciation. Market predictions. Price projections. Analysts have varying projections for Bitcoin's price by 2025. While some expect it to reach $150,000, others, including Jeff Kendrick from Standard Chartered, predict a potential peak of $200,000. The market's inherent volatility is expected to persist, influenced by events like the US presidential elections and Bitcoin's upcoming halving event. Global market sentiment. The prevailing sentiment around Bitcoin is largely optimistic, with many analysts asserting that continued growth in institutional and retail adoption will lead to significant price gains. The combination of favorable market dynamics and positive regulatory shifts contributes to this bullish outlook. Divergent views. Despite the general optimism, opinions vary significantly regarding the extent of Bitcoin's future price increases and the timeline for these changes. While some analysts see $100,000 as a critical milestone, others project much higher valuations. The market remains cautious, with warnings about potential volatility being a recurring theme in discussions about Bitcoin's future. Timeline of key events impacting Bitcoin in 2025. 1. 2024 halving event. Scheduled to reduce miner rewards. This event is anticipated to exert upward pressure on Bitcoin prices. 2. US presidential elections. The outcome of these elections is expected to influence regulatory frameworks and market sentiment significantly. 3. Strategic reserve developments. Countries are likely to establish Bitcoin reserves throughout 2025, which will enhance its legitimacy and increase demand. 4. Regulatory changes. Ongoing developments in crypto regulations will likely accelerate institutional investment and broader adoption. Conclusion. The outlook for Bitcoin by 2025 is decidedly positive, driven by increasing adoption across banking, retail, and insurance sectors. Institutional interest, favorable regulatory environments, and technological innovations are key factors that will contribute to this growth. While the volatility of Bitcoin remains a concern, its potential to solidify its status as a mainstream financial asset is significant. Retail investors are encouraged to consider this unique opportunity for portfolio diversification and as a hedge against inflation as the financial landscape continues to evolve. References: 1. Economic Times analysis on Bitcoin's growth and market predictions. 2. Insights from experts in cryptocurrency markets regarding technological advancements and regulatory impacts. 3. Historical data and market trends leading up to the 2025 forecasts. This report encapsulates the transformative potential of Bitcoin within global markets and outlines the key factors that will shape its future, offering insights for investors and stakeholders alike. The content presents an optimistic forecast regarding Bitcoin's influence on global markets, particularly within the banking, retail, and insurance sectors, predicting a 50% increase in adoption by 2025. It identifies several key drivers that could contribute to this growth, including institutional adoption, regulatory reforms, technological advancements, and strategic reserves established by governments. Counterintuitive information. 1. Institutional adoption versus market volatility. While institutional adoption is generally seen as a stabilizing factor for Bitcoin, the narrative around increased institutional investment through vehicles like ETFs suggests that this influx could lead to significant price volatility. Institutional investors are not immune to making speculative decisions and could contribute to market swings, contradicting the notion that their presence would inherently stabilize the market. 2. Regulatory clarity as a double-edged sword. The forecast emphasizes that regulatory clarity will foster a more supportive environment for Bitcoin. However, there is a counterintuitive aspect where increased regulation could also lead to restrictions that stifle innovation or make compliance burdensome for smaller players. This could eventually hinder the overall growth and adoption of Bitcoin, contradicting the expectation that regulation will uniformly benefit the ecosystem. 3. Global adoption and local restrictions. The expectation of a surge in Bitcoin adoption across various regions, facilitated by favorable regulations in places like the US, may overlook the potential for local governments to impose more stringent restrictions. For instance, countries that are initially supportive could pivot in response to economic pressures or political shifts, leading to a scenario where global adoption is uneven and potentially stunted in certain markets. For technological advancements and trust issues, the emphasis on technological innovations enhancing Bitcoin's utility raises a counterintuitive notion that as technology advances, the complexities associated with using cryptocurrencies may increase, potentially alienating non-tech-savvy users. This could create barriers to entry that paradoxically hinder broader adoption rather than facilitate it. 5. Strategic reserves versus market demand. The establishment of strategic reserves by governments is posited as a means of legitimizing Bitcoin as a mainstream asset. However, this could lead to a situation where governments hoard Bitcoin, reducing the circulating supply available in the open market. This could drive prices up but simultaneously create a scarcity that may deter everyday users from engaging with Bitcoin, countering the narrative of increased adoption. 6. Divergence in price predictions. While there is a general consensus on the bullish sentiment towards Bitcoin's future price, the range of predictions, from $150,000 to potentially as high as $1 million, illustrates a significant disagreement among experts. This divergence suggests that the market remains unpredictable and that factors influencing price could lead to outcomes far different from the optimistic projections. challenging the idea of a unified bullish outlook. 7. Retail investor participation versus institutional trends. The narrative implies that as institutional adoption rises, retail investor participation will naturally follow. However, this may not hold true if retail investors perceive Bitcoin as becoming an exclusive asset class primarily for institutional investors. This could lead to a situation where retail interest wanes instead of increasing, contradicting the expectation of a broadening user base. 8. Inflation hedge perception. The forecast positions Bitcoin as a potential hedge against inflation. However, if Bitcoin's price becomes highly volatile, it might be perceived as a risky asset rather than a stable store of value. This perception could deter individuals looking for reliable inflation hedges, complicating the narrative that Bitcoin will naturally attract those seeking protection from inflation. In conclusion, while the forecast for Bitcoin's adoption and influence on global markets appears optimistic, there are several counterintuitive elements that suggest potential complexities and challenges in realizing this vision by 2025. These factors underscore the unpredictable nature of cryptocurrency markets and the need for cautious optimism among investors. Important overlooked content in Bitcoin's influence on global markets. 1. Strategic reserves by governments. One of the most significant yet often overlooked aspects in the discussion of Bitcoin's future is the establishment of strategic reserves by various countries. This concept, put forth by influential figures like Donald Trump, emphasizes that nations creating their own Bitcoin reserves could fundamentally change the perception of Bitcoin from a speculative asset to a legitimate component of national financial strategies. For example, countries like El Salvador and Bhutan have already taken steps in this direction. The significance lies in the potential for increased legitimacy of Bitcoin, which would likely lead to greater adoption both at the institutional and retail levels. This could create a snowball effect where, as more governments adopt Bitcoin, more individuals and businesses may follow suit, accelerating the overall market growth. 2. Technological integration with emerging sectors. The potential for Bitcoin and blockchain technology to integrate with sectors such as artificial intelligence (AI) is another key point that could be easily overlooked. Many discussions around Bitcoin focus primarily on its financial aspects, but the combination of blockchain with AI could lead to new applications and use cases that enhance Bitcoin's utility. For instance, AI can improve transaction verification processes and enhance security protocols, making Bitcoin transactions faster and safer. This technological evolution could attract a wider range of users and investors who are interested in the broader implications of Bitcoin beyond mere price speculation. 3. Market sentiment and psychological barriers. The report mentions the psychological significance of crossing the $100,000 threshold, yet the broader implications of market sentiment are often underestimated. The psychological barriers that Bitcoin faces can heavily influence trading behavior and market dynamics. When Bitcoin achieves certain price points, it can trigger a bandwagon effect where both retail and institutional investors rush in, further inflating prices. Conversely, failing to maintain these levels may lead to panic selling. Understanding the psychology behind market movements can provide investors with a more strategic approach to trading and investing in Bitcoin. 4. Impact of regulatory clarity. While regulatory changes are frequently discussed, the nuanced implications of regulatory clarity are often overlooked. Many investors see regulations as a threat rather than an opportunity. However, clear regulations can provide a framework that legitimizes Bitcoin and encourages institutional investment. Countries that create supportive regulatory environments can attract investments from hedge funds, pension funds, and other large institutional players who were previously hesitant due to uncertainty. This influx of capital could significantly uplift Bitcoin's market valuation and stability. 5. The role of ETFs in market accessibility. The anticipated growth of Bitcoin exchange-traded funds (ETFs) is mentioned, but the broader impact on market accessibility is not fully explored. ETFs can democratize access to Bitcoin investments, allowing individuals who may not have the technical knowledge or resources to buy Bitcoin directly to invest in it through more traditional financial vehicles. This increased accessibility can lead to a more diverse investor base, which is crucial for the long-term stability of the cryptocurrency market. Furthermore, the presence of ETFs may also encourage more compliance and higher standards within the cryptocurrency industry, fostering a healthier ecosystem for Bitcoin. 6. Volatility as an investment opportunity. While the report acknowledges Bitcoin's inherent volatility, it does not fully delve into how this volatility can be interpreted as both a risk and an opportunity. For savvy investors, periods of volatility can present unique buying opportunities, allowing them to acquire Bitcoin at lower prices before anticipated upward movements. Additionally, understanding the causes of volatility, such as market sentiment shifts or external economic factors, can equip investors with the insights needed to make informed decisions. 7. Geopolitical factors. The influence of geopolitical changes on Bitcoin adoption is another often overlooked element. The state of global politics can significantly impact Bitcoin's viability in various regions. For instance, countries facing economic crises may turn to Bitcoin as a hedge against inflation or currency devaluation. Conversely, nations that maintain strong fiat currencies may resist Bitcoin adoption. Keeping an eye on geopolitical trends can provide investors with a clearer picture of where Bitcoin may gain traction or face obstacles. 8. Long-term adoption trends. The report forecasts a 50% increase in Bitcoin adoption across various sectors by 2025, yet it does not elaborate on the long-term trends beyond this point. The adoption curve in technology often follows an S-curve where early adopters pave the way for mass adoption. Understanding where Bitcoin currently stands in this curve can help investors gauge its potential for future growth. Additionally, the cultural and societal shifts toward digital currencies, particularly among younger generations, may drive sustained adoption that extends beyond 2025. 9. Environmental considerations. Lastly, discussions around Bitcoin often neglect the environmental impact of cryptocurrency mining. As regulatory bodies and consumers become increasingly concerned about sustainability, Bitcoin's energy consumption could pose a barrier to its widespread adoption. However, this presents an opportunity for innovation where advancements in green energy solutions for mining could bolster Bitcoin's appeal as a sustainable investment. Addressing these environmental concerns proactively could lead to a more favorable perception of Bitcoin among investors who prioritize ethical investing. In conclusion, while the report highlights numerous factors contributing to Bitcoin's anticipated growth, it is crucial to delve deeper into these overlooked areas. Understanding the implications of strategic reserves, technological integration, psychological barriers, regulatory clarity, ETFs, volatility, geopolitical factors, long-term trends, and environmental considerations can provide a more comprehensive view of Bitcoin's position in the global market and its potential trajectory leading up to and beyond 2025. Key points for in-depth analysis on Bitcoin's influence on global markets by 2025. 1. Institutional adoption and market dynamics. The adoption of Bitcoin by institutional investors is a critical driver of its growth. Analysts predict that Bitcoin exchange-traded funds ETFs will play a significant role in attracting institutional capital, making Bitcoin more accessible to retail investors. The anticipated pro-crypto regulatory environment in the US and other regions, including Europe and Canada, is expected to encourage institutional participation. This institutional influx could not only stabilize Bitcoin's price but also propel it to new heights, with projections suggesting potential valuations between $150,000 and $1 million by the end of 2025. 2. Regulatory clarity as a catalyst. Regulatory developments across various jurisdictions are poised to create a more favorable environment for Bitcoin. Countries easing restrictions and adopting pro-crypto stances could significantly enhance market confidence. The expected regulatory clarity will likely facilitate institutional investments and encourage retail participation as consumers will feel more secure engaging with cryptocurrencies. The impact of upcoming U.S. presidential elections combined with favorable policies could further stimulate market activity and investor confidence, leading to a potential 50% increase in adoption across banking, retail, and insurance sectors by 2025. 3. Technological innovations driving adoption. The integration of advanced technologies such as blockchain and artificial intelligence is set to enhance Bitcoin's applicability in real-world scenarios. Innovations aimed at improving Bitcoin's functionality, security, and transaction efficiency will likely drive further adoption among businesses and consumers. This technological evolution can make Bitcoin a more appealing option for transactions and investments, positioning it as a mainstream financial asset rather than a speculative investment. The collaboration between tech firms and financial institutions could lead to new products and services that utilize Bitcoin, thereby expanding its market footprint. 4. Formation of strategic reserves by governments. The potential establishment of Bitcoin strategic reserves by governments could significantly legitimize Bitcoin as a credible asset class. Initiatives from countries like El Salvador and Bhutan, combined with discussions around the U.S. creating a strategic reserve for Bitcoin, may enhance demand and stabilize its price. Such developments could attract further institutional investment and create a robust framework for Bitcoin as a hedge against inflation and economic instability. The implications of this trend could lead to a substantial increase in Bitcoin's market capitalization and widespread acceptance as a standard asset among various sectors. Conclusion. The convergence of institutional adoption, regulatory clarity, technological advancements, and the formation of strategic reserves presents a multifaceted outlook for Bitcoin's future. As these elements interact, they could significantly influence Bitcoin's role in global markets by 2025, fostering a more inclusive and robust cryptocurrency ecosystem. Investors and stakeholders should monitor these trends closely, as they hold the key to understanding Bitcoin's trajectory in the coming years. Here are 3 famous historical cases that draw parallels to the anticipated influence of Bitcoin on global markets and its potential for widespread adoption. 1. The rise of the Internet in the 1990s. The advent of the Internet fundamentally transformed global communication, commerce, and information sharing. Initially met with skepticism, the Internet gained traction as technological infrastructure improved and regulatory frameworks adapted to support it. Much like Bitcoin today, the early Internet faced significant challenges, including concerns over security, regulations, and standardization. However, as companies and individuals recognized its potential, adoption soared, leading to the dot-com boom of the late 1990s. This transformation not only created new business models but also disrupted traditional industries, mirroring the current trajectory of cryptocurrencies like Bitcoin within established financial sectors. 2. The gold standard to fiat currency transition. In the early 20th century, the world operated largely on the gold standard, where currency values were directly linked to gold reserves. The transition to fiat currency, particularly following events like the Great Depression and World War II, saw governments take on more control over monetary policy. This shift was initially met with resistance as people were accustomed to tangible asset-backed money. However, as trust in government-backed currencies grew and the global economy evolved, fiat currency became the norm. Today, Bitcoin's rise can be seen as a return to asset-backed value, in this case through scarcity, amid concerns over fiat currency devaluation and inflation, particularly as central banks around the world grapple with monetary policy challenges. 3. The advent of credit cards in the 1950s. The introduction of credit cards revolutionized consumer spending and banking. Initially, they faced skepticism from both consumers and financial institutions alike, primarily due to concerns over debt fraud and the implications of credit on personal finance. However, as consumer behavior shifted and financial institutions developed robust security measures and regulatory frameworks, credit cards became ubiquitous. Their integration into everyday life transformed retail banking and personal finance. Similarly, Bitcoin is navigating skepticism as it seeks acceptance in banking, retail, and insurance sectors where it must prove its reliability and utility, much like credit cards did over time. These historical cases illustrate how transformative technologies and concepts can reshape markets and consumer behavior, paralleling the current landscape of Bitcoin and its potential to influence global financial systems. Future outlook: Bitcoin's influence on global markets and adoption forecast for 2025. As we advance toward 2025, the landscape of Bitcoin adoption appears poised for substantial growth across various sectors, particularly banking, retail, and insurance. Predictions indicate a potential increase in user adoption by 50%, driven by several factors including regulatory clarity, institutional investment, and technological advancements. Institutional adoption. The role of institutional investors is paramount in shaping Bitcoin's future. Analysts predict that the introduction of Bitcoin exchange-traded funds (ETFs) will significantly boost institutional participation. Pro-crypto policies, particularly in the United States, are expected to create a favorable environment that encourages institutional investment. Price projections for Bitcoin vary widely, with estimates ranging from $150,000 to $200,000 and some experts forecasting prices as high as $250,000 to $1 million by the end of 2025. Regulatory clarity. Regulatory changes are anticipated to play a crucial role in Bitcoin's growth trajectory. Many countries, including those in the European Union, Canada, and the Middle East, are moving towards more favorable regulations that could ease restrictions on cryptocurrency. The expected pro-crypto leadership in the US is likely to further stimulate institutional interest, paving the way for a more stable and supportive regulatory environment. Technological innovations. Technological advancements in blockchain and related fields are set to enhance Bitcoin's utility, making it more applicable in real-world scenarios. The integration of blockchain with emerging technologies such as artificial intelligence holds the potential to drive further adoption. These innovations are likely to attract both institutional and retail investors, reinforcing Bitcoin's position as a viable financial asset. Strategic reserves. The establishment of Bitcoin strategic reserves by various governments and financial institutions could solidify Bitcoin's status as a mainstream asset. Countries like El Salvador and Bhutan are already exploring this concept. Influential figures, including political leaders, suggest that creating reserves for Bitcoin could lead to increased demand and validation as a legitimate financial asset. Market predictions. Price movement. While most analysts remain optimistic about Bitcoin's price trajectory, the market is expected to experience considerable volatility. The 2024 halving event, which will reduce miner rewards, is anticipated to create upward price pressure. Analysts believe that if institutional and retail adoption continues to surge, Bitcoin could see significant gains, with potential peaks reaching $350,000 or more. Global market sentiment. The overall sentiment surrounding Bitcoin remains bullish. Analysts emphasize that the combination of institutional and retail adoption, favorable regulatory changes, and technological advancements is likely to create a robust market environment. The convergence of these factors is expected to lead to higher valuations and greater acceptance of Bitcoin as a mainstream financial asset. Timeline of key events impacting Bitcoin in 2025. 1. 2024 halving event. The upcoming halving is expected to tighten supply, historically leading to price increases. 2. U.S. presidential elections. The political landscape could significantly affect Bitcoin regulation and market sentiment. 3. Development of strategic reserves. Increased participation of countries in establishing Bitcoin reserves throughout 2025. 4. Evolving regulatory frameworks. Ongoing changes in cryptocurrency regulations that could accelerate institutional investment. Divergent perspectives. Despite a generally positive outlook, there are differing opinions on the extent of Bitcoin's potential growth. Some analysts caution about the inherent volatility of the cryptocurrency market, suggesting that price fluctuations could be significant. Conservative estimates place Bitcoin's value at around $100,000, while others remain optimistic about reaching much higher valuations. Conclusion: the outlook for Bitcoin in 2025 is characterized by optimism and potential for significant growth. With the expected rise in adoption across banking, retail, and insurance, alongside favorable regulatory changes and technological advancements, Bitcoin is on a trajectory to become a mainstream financial asset. Retail investors are encouraged to view this period as an opportunity to diversify portfolios and hedge against inflation, as the evolving landscape may provide unique investment opportunities. The convergence of institutional interest, regulatory clarity, and technological innovation positions Bitcoin favorably for the future, making it a focal point in financial markets worldwide.